perspective. Endowus is beginning 2021 with this virtual conference and Endowus Insights conference. So very excited to have an amazing panel of speakers here today with us. And I just want to maybe introduce the speakers for the first panel, and then we'll move into a very quick introduction of Endowus and some housekeeping. Since it's our first webinar for the day, we have 4 exciting panels today, so please join us for all of it. But maybe we'll begin with a welcome for our 3 speakers today. Jenny?
Hi. Hi, everyone. I'm Jenny Sofian from Fullerton Fund Management.
Okay, Gerard.
Hello, I'm Gerard from Lion Global Investors.
Okay, great to have you here. And
Hi, I'm Boon Kiat from UOB Asset Management. Glad to be here. Thanks, Sam.
Thank you so much. So we have, as you can see, the CEO of the three biggest domestic fund management houses. And it's a bit weird because we keep looking at the TV screen instead of the camera.
And I don't know where's the camera.
Get used to this new layout, right?
Yeah.
So I'm going to begin with some housekeeping. Obviously, on the screen, we're actually today live on YouTube and also on Facebook. So please follow us on YouTube and Facebook if you want to be updated on any new content from Endowus. At the bottom of the screen, we will have the Slido number. So the event code is 39624. Please plug that in on slido.com or slid.co. And you can actually ask questions. We have a live poll that's going on that I'll touch upon later at the end, where we have a Q&A panel there, and you can actually upvote the questions. So the most popular questions will be answered by the panelists here today. So please use Slido. We will not be using the YouTube chat function. You can have chats, you can ask questions about Endowus. Our client experience team will be answering any questions that are up there specific to Endowus, but we will not be answering any questions on Endowus. We'll only be talking about the topic today at hand. And please direct the questions to the panelists. And we will have a full session and then do the Q&A session at the end. And also, I would like to point out that there are some links underneath on the YouTube channels. So there's a few links about Endowus if you want to reach out to one of our MAS licensed representatives. If you want to discover more about the fund managers. Also, we have just launched our new ESG investing website. So Endowus is espousing to be the leader in sustainable investing here in Singapore for individual investors. As we know, there aren't too many options for individual investors and retail investors here in Singapore. So Endowus is working together with the leading fund management companies to introduce new ESG and sustainable investing solutions. And so the website actually went live today. So,
Congratulations.
Thank you. And so please check it out and let us know if you have any feedback. We have a first set of funds that are available, and we'll make more available in the future. Okay, so I'm going to go through a very quick introduction to Endowus since it's our first panel. So we'll have some slides up that will explain who Endowus is and what Endowus is about. So this is, maybe if we can go through the slides, a very amazing list of panels speakers today. We're very excited to have Jenny, Gerard, and Boon Kiat in the first session. But we have a whole host of excellent speakers, so please join us for the other panels. In today's program, it will be over 4 panels, and we'll have short breaks in between. The Endowus mission is really to help people invest better so they can live easier today and live better tomorrow and through retirement. So we want to take care of you throughout your whole life. The problem that we experienced when we began the business, any good business always begins with a pain point. And we experienced this personally before we began the business. It really is the broken experience of investing here in Singapore. And it's not because of the fund management companies or the investors. It's actually the distribution and the way the industry is set up, especially painful for individual investors. And the root cause of some of these problems are the lack of aligned advice or the lack of advice altogether. or sometimes there's a lack of access to great products. We know they're available, but some of them are not available here in Singapore, not in Sing dollars, or if it's not tax efficient, for example. And just the overall cost of investing here in Singapore is very high. And a lot of it is because of the channels and the industry structure. And this leads to obviously poor outcomes. So Endowus was created to really solve this wealth experience. We've introduced a digital, very tech-savvy, hyper-personalized and a holistic approach to investing your personal financial wealth. Access to much better financial products, sometimes exclusive, especially in CPF. We have the only passive index funds available in Singapore, working together with Gerard's tremendous support to bring that into CPF. We are actually working with fund managers to introduce cash smart solutions. Fullerton and Jenny's team were instrumental in bringing that solution for cash management and cash smart. And UOB Asset Management is a leader in sustainable investing and digital transformation. And so we've worked together very closely on those strategies, and we're introducing a UOB Asset Management sustainable investing product as one of the first funds introduced into the Endowus Fund Smart platform. So we're working really hard to bring very differentiated, sometimes exclusive, but always the best-in-class products for individual investors. And we're doing that and achieving really low cost, which will lead to better outcomes. Not only that, we are the first and only digital advisor for CPF investing. We've worked with the CPF board and various ministries and MAS to make this possible. But the most important thing is we have invested very heavily as a firm in the technology to allow a digital experience and a seamless experience in investing your CPF. As a result, we are the only platform where you can invest your CPF, your SRS, and cash in a seamless experience on one single platform. So that go-to, next page, for the go-to wealth platform, basically a one-stop shop where you can meet all your wealth needs across all your source of funds. You can save better by using short-term liquidity and investment cash products. You invest better through core advised target risk market portfolios at low cost, globally diversified, Sing dollar and tax efficient. You can build better, a lot more flexibility to build model portfolios that's suitable for you. Introducing DIY fund investing, but unlike some platforms where you have 2,000 funds and too much choice with no advice, we're allowing you to access the best-in-class funds by curating and selecting the best-in-class funds for you, so that all the hard work is already done. And a multi-fund portfolio you can create seamlessly and look at the overall portfolio instead of looking at a single fund. So the FundSmart platform is actually a cutting-edge portfolio creating tool for the individual that hasn't been available in Singapore before. We obviously partner and stand on the shoulder of giants. So all the fund management partners we work with, they are the experts in building product, in manufacturing solutions that is suitable for retail investors here in Singapore. So we're really excited to partner with some of the biggest global and local fund management houses. 3 of them are right here sitting with us. So really excited about this. So for the rest of the sessions, we have the next session at 5:10 beginning with Susan So from Schroders, Dave Fernandez, who's the co-director of the Singapore Green Finance Center, and David Smith, who's the senior director and head of ESG at Aberdeen Standard, talking about ESG. We have a retirement and CPF panel with Boon Chai, the CEO of SGX, Chin Hang, who's the deputy CEO of CPF Board in charge of services, Joe Cherian, who is a practicing professor at NUS Business School for Finance, but also was on the CPF advisory panel, and Liu Cheng Chuan, who is an entrepreneur, ex-Singtel executive in the digital center, but also really most critically is the founder of the 1M65 movement, which is trying to achieve 1 million by 65 for all Singaporeans through your CPF. And the final session at 7:30 will be the Uncommon Sense session with 3 of the most exciting, most famous, I don't know if you guys know these guys, but these guys are some of the most famous guys in personal finance and financial blogs. So Dollars and Cents, co-founder Tim. We have Seedly, which is a comparison site, but also a lot of financial services reviews are there. So Kenneth joining us from Seedly. And The Woke Salaryman, which is amazing. Hundreds of thousands of followers on a cartoon finance, personal finance education side, the woke salaryman. The Rooming is one of the co-founders there and the content person there. So we have 3 amazing panels ahead of us, but right now at 4 o'clock, we're a bit over, sorry, and I'm talking a bit too much. 4:10 already. Jenny, Gerard, and Boon Kiat are here to take us through the outlook for this year. And we'll start with Jenny. Maybe you can all go through and introduce yourself and also the company that you lead. Okay.
Hi, everyone. Good afternoon, and very happy to be here. Thank you also to Sam for organizing this webinar. I think this is a very opportune time for us to discuss about this topic after COVID pandemic and to see how it has changed the investment landscape. So I've been in the industry for over 20 years, coming 30 years soon. Let me just delve in to have a quick introduction of Fullerton Fund Management. Fullerton Fund Management is a subsidiary of Savira, which is fully owned by Temasek Holding. And we also count in NTUC Income as our substantial significant shareholder. In terms of the capabilities, we have a spread of capabilities from treasury management, which is more cash-like product, as well as fixed income, equities, multi-assets, and alternatives, where these capabilities are headed by very experienced team heads. We call head of investment that has got an average of 24 years to be exact of experience in the field. We are an active managers, and we believe in investing in talents. So there are 45% of our investment of our staff are basically all investment professionals. So based on all these capabilities that we have the expertise to actually scale and actually have flexibility to create solutions for investors across retail segment as well as also the institution segment. So in the retail segment, we also look at servicing the platforms, investment platforms, and also all of you, wealth platforms. And on the institutional side, we actually support, also invest on behalf of the institution from sovereign wealth funds, central bank pension funds, across the whole institutional spectrum. In the recent past years, we have had good momentum. So as today, we are managing asset under management of about 64 billion today. So.
Okay, thank you so much, Jenny. We'll move on to Gerard.
Hello, everybody. I'm Gerard. I've been in this industry for a long time. Started working in asset management in '86. I work for Lion Global Investors. We are one of 2 oldest asset management companies in Singapore. Currently, we manage $68 billion. That's Sing. And in terms of capabilities, like most other AMCs who have been around for this time, our asset capabilities span across the various asset classes. But today specifically, I just want to highlight how we are, or what we are known for in recent years. We caught the disruptor trend, so we started the Global Disruptor Fund a few years ago. We then started a ETF on Singapore REITs, and that actually is very well bought by a lot of people. Most recently, we started another ETF. This time we go north, and it's focused on the top 30 tech stocks in China that is listed on the Hang Seng Stock Exchange. And then we also think of the man in the street. We started a all-weather fund that is low cost. And then what's up and coming is something we call omakase. So we'll be starting omakase funds. It's not about Japanese food, but it's about curation. So watch that space. So that's all I have for you today. Thank you.
Thank you, Gerard. Boon Kiat.
Yeah. Thanks, Gerard. Hi, I'm Boon Kiat from UOB Asset Management, and I'm getting a little hungry because of what Gerard just said. Yeah, just a little bit about UOB Asset Management. In a sense, we are sort of the old kid on the block now, having heard from Fullerton and from Jenny and Gerard. We were formed in '86. So we have been around for almost 35 years now. And maybe a little bit different from my colleagues here, UOB Asset Management is actually all around Asia now. We are in 9 countries. And I find it easier to tell you which countries we are not in yet. That's South Korea and Philippines. And we just completed a transaction in Vietnam. So we are here. We have been around for a long time. Something like 400 over people all around Asia. And in terms of AUM, we are about 36 billion as I speak today. And if I could just have the next slide. Yeah, thanks. I was quite glad to hear what Sam spoke about. In fact, when I first met Sam, there was this, I felt a congruence of our vision and our purpose, and I think that's where that alignment has been. And it's not dissimilar to what Endowus has spoken about. It is really to create value for our investors, for our partners, and the communities that we are involved in, and to help them achieve their goals and aspirations. So we do it either directly or in partnership with great upcoming platforms such as Endowus. And the vision is really all about trust, to build trust with our investors, with our partners, with focusing on certain niches. Sam mentioned digital and sustainability, and I think that's where the future lies for the industry. In terms of digital, we work with platform partners. We also go direct through our platform called UOBM Invest, and that's for individuals and corporates. And as I speak to you today, we have actually raised just crossed $1 billion in AUM on those platforms. Sustainability is something that I believe in personally with a lot of conviction, and I think it's good now that the industry is actually awakening to the fact that you can achieve profit and purpose at the same time, and I think that's going to be the trend going forward. Just a little bit about myself. I joined UOB Asset Management more than 26 years ago from GIC. And I like all things technology, I like all things football, and that's where me and Sam are a little bit of rivals. We've got something on tonight, Sam, right? Yeah. So may the better team win, i.e. my team. And yeah, and I like reading also, so I must spend the last hour of my day curled up with my Kindle. So that's it, Sam.
Okay, thanks. Thank you so much, Boon Cat. And yeah, I have to say that we lost to you last time, and for full transparency, because Endowus is all about transparency. I'm a Spurs fan, and Boon Cat is a Liverpool fan, and we have a match tonight.
Yeah, we'll talk again tomorrow, Sam.
We may not be friends tomorrow.
Yeah, we'll see. Yeah.
I don't know if others have supporting teams, but I just want to make one last housekeeping, which is the poll. So Boon Cat says we stole it from his Outlook event, but with vaccine distribution now underway, how soon will life return to normal? This poll is live on Slido right now, so please go to the Slido. We have some already amazingly interesting questions coming up, and please upvote the ones that you want answered first. But also we'll have this poll throughout the session. We only have one poll, so please bear with us. We're not going to be too boring. And then after the poll, we'll share the poll results at the end of each panel. Okay, as we pan out and show everybody this view, we're at the Great Room at Neon City. So a shout out to the Great Room who are providing us with this wonderful venue. It's actually supposed to be a very casual, friendly conversation and chat amongst friends. That's how it's supposed to be. But Jenny will tell you this is very uncomfortable for us. It's uncomfortable for us, but it looks great for you guys. So we're doing this for you.
Yeah, it's the chairs.
It's the chairs and the sofa. And still yet maintaining our safe social distancing. So that's what this layout is about. But also really want to encourage an open conversation about various things that's going on in the market and in the industry. So I want to start off with, how many years have you been in the industry? Jenny, you were saying you were counting earlier.
Yeah, 28.
28 years. And Gerard?
35.
35 years. And Boon Cat?
Same as Jenny. It's a lucky number to
28.
So just stay there. Yeah.
I'm one short. I'm approaching 27 now. So all CEOs, I used to be the CEO at Morgan Stanley Investment Management. We've all been working for over 25 years, a quarter of a century. And Gerard is obviously our senior. But combined experience of over 120 years.
Making us feel old now.
Yeah.
Experienced is the word. So I want to open up with, actually, I'm going to take a question from the audience first. And I know you guys are unprepared, so I'm just going to warm you guys up.
Sure.
So all this massive single stock pumping, Reddit, Robinhood, crazy things going on in the US. And across even Asia, people are single stock trading and going mad. So I just wanted to hear your honest personal thoughts about the way the younger generation recently and even older generation are learning about investing and investing in financial markets right now. In a post-COVID evolution of the industry, I think, especially for individual investors, I would love to hear from three very experienced people about your thoughts about the trends in investing, and maybe tied to that, you can touch upon your company's vision of how investing should be done, and where the asset management industry is headed. So I'm going to go the other way this time and start with Boon Cat and come back through Gerard and Jenny. So each of you can have a very brief comment about these things, and
with respect to Robinhood and Reddit, and I'm thinking you're talking GameStop here.
GameStop and everything that's going on.
It's quite scary, but I feel it's quite easy to be dismissive that this is all irrational exuberance, as the word goes. And we sort of frown upon these things because you think it should be something wiser. I think there's a little bit of both there. A little bit of certainly exuberance, overconfidence, if you would, Sam. But I would also suggest that what I've been experiencing in the past few years especially is that the younger generation have become much more educated about all things investments. They ask, in my experience, again, the right questions. They are very critical about what they think and do, whether it be to invest personally or to invest even as an analyst. They ask good questions, and I've seen it when we have a robo-advisor, and we conduct seminars such like yourselves, and I noticed they ask very critical questions, very analytical questions that I think suggest that things are moving in the right direction. I was speaking to someone about ETFs yesterday, and the young people are actually participating in this, and you're talking about single stock, but there's about a lot of wisdom in this part there, that they are actually thinking about investment more critically and more long term. And I feel maybe Robinhood is one of those episodes that everyone gets excited. I mean, this morning I woke up, I saw GameStop and the whole market was down 600, GameStop was still up 100 and don't know how many percent, right? And firstly, I wish I invested in it anyway, right? I mean, why look down? But that's the way, I think there's a lot going forward, and I feel just leading on to where the industry is going, technology will be a great enabler for the next phase of growth in the wealth management industry. I'll just leave it at that for the time being. And
Sounds
then,
good. Great start, Boon Cat. And we all started with stocks, right? Stock picking and investing
and losing money.
Move on, and we learn from losing money. So, Gerard, any thoughts?
Well, I was glad that we did not short GameStop. Well, my business model is not a hedge fund, so we can't short any stock. So I was delighted that none of my managers actually were shorting stocks. That these are called the oddball stocks. They all have done very well. But it's quite easy to be dismissive about what's going on. I think there's a certain euphoria that's going on. When it's going to end, we have no clue. But I think it is very important to understand human nature. All of us like some form of entertainment, especially in investing. So we have to allow for people to entertain themselves. Making or losing money is a separate matter. People want to have bragging rights. So right now, besides entertainment, there's the political aspect of it. They just want to sort of gather themselves to go against the big guys. The big guys are the Wall Street guys. So if today we were Americans, then we will be the kind of companies that they are going after, So we have to allow for that. But I think we'll dwell about the nuances between investing and entertainment later. But I think we have to allow for that. Otherwise, we're all human beings. We like to amuse ourselves. We like to have bragging rights, especially now that Lunar New Year is around the corner. This year, perhaps very different. You need to want to talk about single stocks. Right? Nobody wants to talk about unit trust. Nobody wants to talk about the index.
So when the family gathers, you want a bragging right.
That's right.
You have the best performing stock.
And to tell the truth, what I really like about my job is that in the last 30 odd years, everywhere I go, I look very smart, right? Because they always ask me for tips,
That's right.
So I've learned to at least have about half a dozen stocks to give people some ideas.
Until they lose money.
And blame you.
Yeah, and blame you.
We'll move on to Jenny.
Top up,
Great answers.
I think in the environment like this, you are seeing that all the market rally, and it's just so tempting, right, for every one of the investors to also jump in. Naturally, post-COVID is giving us very, very different environment. I think with all the various stimulus, I'm sure we'll talk about it, that is happening. It is actually creating a different environment today. Yes, you look at liquidity that is actually happening and allow across the board, all the financial markets have rallied across. But the fact is that, a lot of this trend, they may look all moving in one direction, but actually the divergence is actually very great when you look at the various dimensions, like the sector, like the companies, like what Boon Kiat has talked about. Technology has actually disrupted the whole industry across the board, not just financial industry, but everywhere. So in that aspect, you are going to see that disruption is going to mean that not every company is going to do well. So looking at the individual investing, looking at one stock, one will have to bear in mind diversification. That's important, So we'll definitely dwell into that. So just warm up, I'll just share this in terms of individual stock investment.
Yeah, that's right. I think Gerard had a great point about, differentiating between investing and entertainment. And, I think it's all about managing expectations, because if you're trying to invest all your life savings and trying to gain 200% return in 1 week, I think that's the wrong thing, because that's, akin to gambling. But if you are just investing through entertainment, you're on the Wall Street Beats or Bets, Wall Street Bets, Reddit, and punting Gamestop stocks, and you put in $200 or $1,000, and you're okay with losing it because it's entertainment. I think that's okay. So that's different, very, very different in the way you do it. And it's really about your personal finances, being serious about your personal finances, because that's not the long-term winning solution to your personal finance or building wealth. So as an MAS licensed financial advisor, we have to give
all the disclaimers start coming out again.
That's right. Okay, so we'll go into the meat of the discussion, which is the global outlook for 2021. As we approach a new year, people come into it with new hopes. A lot of people coming out with a lot of forecasts. Even though they got it all wrong last year, they're coming out with new forecasts. I wrote an article on the Business Times. So Endowus has a column called The Science of Wealth. And I was saying we should get rid of the charlatans of Wall Street and forecasters and people who try to make you think that they can actually accurately forecast the future. Human beings cannot do it in any other space or any other things. But for some reason, when they look at financial markets, they think they can predict the future. So I'm not asking you to predict the future, but maybe just provide intelligent ideas about the volatility that we are experiencing in the markets. The sort of the macro big picture thoughts that you have as a firm. It could be personal or the company's view. And it's interesting because Gerard and Jenny has a more fixed income background, and Boon Kiat and I have a more equities background. So we have an even split here. So we can share notes on various topics and multi-assets. But I'll start maybe with Gerard this time on some overarching thoughts and views about this year, the COVID, post-COVID, or pre-vaccine or post-vaccine world that we're in.
I've actually given up trying to forecast the markets for the last 20 years already, okay? But I know that because I'm in this business, I still have to attempt, okay? So it's not about forecasting per se, it's about laying out the big picture for context. I think we all have to know context. Because with the context, then you have to figure out how you want to entertain yourself and how you want to save money for the long term. So the big picture for this year would be that interest rates are at 50-year low. So therefore, the power of compounding is not kicking in. Absolute rates are very low. Interest rate spreads are very tight. So the classic diversifier of moving away from stocks into bonds, that is not kicking in. Then we go into equities. Now, equities are trading as if there is no COVID, right? So everyone is looking beyond the valley of darkness. So as the vaccine program are being rolled out, people are looking beyond that, okay? So stocks are very overvalued. Most of them are trading with a PE ratio of between 20 to 30s. But you think that that is stretched. Let me remind you that in the late 80s, Japanese stocks, before they pick up, they were trading at a PE of 65. So I'm not saying that the current euphoria will last until all these stocks will get to a PE of 65, but it's just that these things can last a lot longer than you think. Then, of course, the other geopolitical events that have dominated the space would be the US change of administration, then also because you have a very friendly Fed, and now with the vaccine rolling out and so on and so forth, there's no real need for people to have flight to quality, so the US dollar would be very weak. Yeah. So perversely, you know, when I was in school, I was told that if you want something steady, you actually invest in fixed income, and you want capital gains, you go for stocks. Now, if you want a steady stream of fixed income, you actually have to buy stocks because it gives you much better dividends. If you want capital gains, you go and buy bonds, because bonds actually perversely can trade into negative interest rates. And that's how bond allocators have been making money, you know. So yeah, so things are actually happening in a very perverse manner. I'm not sure whether this is helpful, but just laying out the landscape for you.
Yeah, no, very interesting point, especially on fixed income, because you know, especially in Singapore, I think we are conditioned to think about fixed income as income generating or yield.
Yeah.
Whereas actually, as you highlighted in Europe and US, increasingly as the world moves to very low interest rates or negative interest rates, people think, oh, we shouldn't allocate to fixed income because we cannot make money and there's no yield. But actually, the money is made in fixed income through capital gains. Yes. And so I think, especially for investors who are less familiar with the fixed income space, I think that's a great point that you make. I'll move on to Boon Kiat for overarching thoughts.
Well, yeah, like you mentioned, we just had our annual investment seminar, and so this is an opportune time, and I'll give you my 5-minute CIO spiel. It's not dissimilar to what Gerard has said. The key drivers, maybe I'll just start off with a general view of 2021. I think it's still going to be a decent year. Nowhere near as exciting as 2020. Hopefully, I don't want that again. There will still be many opportunities. The key drivers, I feel, and not dissimilar to what Gerard said for 2021, are the 2 R's, rates and recovery. Rates, I'll agree that rates will remain low for various reasons. And obviously, we spoke about vaccines, and there will be a recovery, corporate as well as economic. And that sort of forms a backdrop for I think, the investment landscape for 2021. This will, however, be somewhat moderated by a few factors. The first would be valuations. They are on the high side, and I'll agree with Gerard, they are not excessive. They are on the high side, certainly. So we should expect some corrections along the way, just like we saw maybe last night. The other one, I would say, is the pace of the vaccination and the pandemic, because that will determine the pace of the recovery. And I think that's something we need to think about also. The good news, I think, is that after a sort of rocky start to vaccination, the world seems to have gotten their act in place, so to speak. But the jury is still out. The other part that I think that is not spoken a lot about, but we should just be a little bit watchful over, is inflation. My general view, which I hold with some amount of conviction, is that it's inflation is if it comes, it will be cyclical. It won't be something structural. There are things going on that actually are deflationary. I feel in the world because of technology. The only price that I've noticed going up is actually Bloomberg terminals. Yeah, nothing else goes up, right?
Painful for small companies like
yeah,
us.
so if anyone from Bloomberg is hearing this, please take note and give us a break here. Yeah. And I think if I sort of let that on to the opportunities we see, there still will be a place for risk assets, I believe. Equities and fixed income, mainly credits. I think that there'll still be a place for that. But we just need to moderate our expectations. I'll agree with Gerard about having a weak dollar, but I think what that leads to, and that's where I'll maybe say with some conviction, is that I believe that this is a year for Asia. I think that the traditional view is always that Asia performs well in the economic recovery, the US dollar is weak, and there's trade, and then the relative valuation. But I think that there's something that's different this time. And what's different, I feel, is that Asia is now in the heart of many global mega trends that are happening. And we saw that in the performance of the North Asian markets, right? And we talk about mega trends such as, you can talk fintech, you can talk about EVs, you can talk about 5G, everything, the whole economic. Yeah, so there's the demand side where there's the markets are there, and the supply side, which is the technology. And I think that's why it's going to be different. It won't be just an afterthought when the US market goes out and therefore let's buy Asia. It's always like that. I think it's going to be different this time. And probably the last point I'll make is that, again, similar to our view that rates will remain low, income strategies will still be fairly relevant. Yeah, so I'll just leave it at that.
Okay, sounds good. Thank you. Jenny?
Yeah. Pretty similar outlook. We see that the fundamentals macro environment is still very conducive in the sense that, the COVID situation is not across the board even uniform recovery. So in that sense, you're going to have government across globally is still thinking about, getting ready to see if there's any additional stimulus that is going to be there to help the economy. Because this COVID-19 is not a financial crisis. It's actually a health crisis that actually trigger a financial crisis. And it hits across the economy. So, the social impact of it is actually greater than what we have seen before. In the context of such, so the liquidity will come in, continue to grow. And that will exactly what our colleagues here, Gerard and Boon Kiat, talk about. We share the view that the interest rate will be very low. But that means that all asset managers or even investors will have to intensify our way to look for better return. Where do we go? We have to then think about, looking at what are the risk assets that are available. Yes, we have seen all across global equities market has done very well. As I previously mentioned, across the board, I think this is very important to be discerning as well. Environment is still conducive. So in order to actually get better return, one will have to think about where else do you go? And that takes into account of how you are actually going to do your investment. I think a lot of us are still, if I may just digress a little to talk about it, is that in the current situation, a lot of us are still putting the investment in cash very comfortably and not deploying it. So, but it takes a lot of comfort to go outside, where you see the low risk type of assets to go to the more high risk assets. And that will mean that you go to equities, credit, bonds. But regionally, if you look at it, definitely across the board is going to do well for the risk assets. But we like Asia, just like what Boon Kiat say. Particularly the fundamentals are actually good with the low US dollar, weakness in US dollar. Definitely it is an era for Asia. But what interestingly, I think we also cannot ignore the fact that China does play a part. China today has actually done very well. You see how they contain the COVID, and it is a very important market. They are a long-term driver for Asia as well in terms of growth. One of the aspects that we think about when you look at China, they have actually contained it well with a very good economic growth. 6.5 last year, we are expecting 8%. This is actually continuing that kind of growth that we have never seen, back already to normal environment. So under this condition, you look at how China is going to play a part. China has actually created awareness for a lot of supply chain. We today have to think about different supply chain because of what has happened, the tension, the geopolitical risk, and with the technology and innovation that we are talking about, all the supply chain will have to reconfigure to an extent that, they will have to diversify away from China. They will have to be resilient and also digitized. So that means that, there's a lot of opportunity for this structural trend globally to be actually looking at Asia and invest in Asia. So that is actually a very interesting trend that will open up a lot of opportunity for us. And besides, apart from China, we are talking about the technology growth as well. The innovation that is actually happening is actually a structural trend. We are today living, working different way. Whether we'll go back to normal after the containment of the COVID, it is still a question mark because we may not go back to the same way as we have.
It's actually the question of the poll.
Yes. So in that sense, I think we have to embrace this technology, and that technology will actually create, if it is going to create cost efficiency, and that will actually create scale. When the scale comes, you are going to see very interesting growth there that can be exponential, as what we have already seen in China, all the technology stocks. So, in terms of outlook, we are still favoring a lot of these assets. And one could actually look at a combination because it spreads across asset classes. So you can actually have a combination of, credit, equities, and even alternatives because you want to search for yield and return. So I think the key at the end of the day, that outlook is how you actually create your portfolio to actually fit the risk that you are actually looking at.
Sounds good. Thank you so much, Jenny. I was just thinking, looking at your experiences, Gerard and Jenny, you both have a Temasek connection. Gerard and Boon Kiat has a GIC connection. Ouch. So we have Singapore Inc. right here.
That's because Singapore is very small. That's right. There isn't very much to go around.
Not too many people to go around. But one of the things, I actually saw a question on the panel, and one of the questions was about cash and cash management, and should be holding cash and investing in fixed income or income products and stuff like that. And it's funny because at the end of last year, we actually did a panel. And we had 3 panelists, one from each of your firms. So Joyce Tan, we had Jessica Soon, and we had Darren join us for a session. And the title of the session was, is cash king still, or is cash trash? So I think it's because it's been put to us by the audience. I want to put that question to each of you. Just say the one word, king or trash, that's it. No explanation. First of all, and then as you elaborate, I think it would be nice if you could hear about your business plans as a company, which geography, which strategy, which products, which, where is the focus of your firm, going forward this year and then into the future. We touched on it briefly, but maybe just one thing or two that your firm is most focused on, and it could be cash products where Lion Global has a lot of experience. It could be digital transformation for UOB. It could be sustainability and ESG for you, Jenny. So we'd love to hear more from you. We'll start with Gerard again, and then come back to.
There are a lot of questions there. It's not just one.
But start with king or trash first.
King or trash? You are putting me in a dilemma, okay? Because at Lion Global, we excel in having cash products. I'm quite sure when Jessica was here last month, she was expounding the merits, of the cash funds that we have.
Yeah.
So wearing my corporate hat, cash is king. But personally,
As an investment and versus products, yeah.
Personally, cash has always been trash. Okay, I don't even invest in fixed income myself for my personal money. Okay,
Wow,
I just invest in equities. Yeah,
nice.
It's as simple as that. My best fixed income instrument is my job, but that's predicated on not losing your job.
And your CPF.
And my CPF, okay? Yeah, so that's already taken care of for most Singaporeans. I nearly lost my job during the Asian crisis, but that was so long ago, yeah? So, but since then, when I had a near-death experience in terms of not having cash, other than that, actually, I realized that the dividends I get from stocks actually beats everything else, yeah? Okay. Now that I get away from this rather...
Actually, I think you're very rich now, You owe me
you can pay for the dinner that we'll have.
Let him pay for this whole thing.
Dinner's on me, okay? You meet me on the street, just let me know.
He's a rich man, don't
forget.
forget. He invested all equity. Okay. Probably got Gamestop too. Sorry, Gerard, carry on.
Okay, in terms of focus on the business, not so much which of these asset classes, because my company has been around for as long as I've been in this industry. So we probably have done everything, okay, and we continue to do everything. But in terms of focus, this year I'm very focused on digitization. We began that journey a few years ago, but last year, because of the lockdown, everything, in terms of the way we work, in terms of how customers buy funds and so on and so forth. So now trying to digitize our collaterals has become very, very important. So making videos, all the pitch books, how we write our script and so on and so forth, everything has changed. I'm just probably, if I divide into 4 phases, I'm just in phase 2 of what I want to do in Lion Global. So I'll be spending the rest of this year probably covering phases 2 and 3, and then probably phase 4 will be in the future. Yeah, so that's what I'm spending all my energy on now.
Great. And we'll move to Jenny next, but I do want to say that you are the 3 biggest players here in Singapore locally. You're the ones that provide the best Singapore dollar denominated local solutions for Singapore-based investors. And when I gave the example, obviously you guys overlap a lot, and I'm not trying to categorize you guys in any way. You guys overlap. You guys all have wonderful products, and I really want to say how wonderful it is working with all 3 of them, because they all have such a good heart. They really want to do the right thing for Singapore-based investors. And as a result, Endowus is really proud, and I'm very personally proud to be working with these 3 CEOs in particular, who are the leaders in the Singapore market. So with that, we'll move on to Jenny on king or trash, and then your most important initiatives.
I would say that considering the low environment that we are in for a long time now, cash will not be able to generate as much as what you would need for financial planning, for also planning for your retirement. I have seen the statistics. It's actually very interesting. Based on the Singaporean household balance sheet concern, Singaporean has actually put in the safe assets, definition of safe assets is as high as 65% in 2008. And at the end of third quarter, these are statistics from CPF, at the end of third quarter 2020, this has gone up to 68%.
Wow.
So that's one statistic. And second statistic that is actually reinforcing the same point about investors being very, very cautious is that, the CPFIS investment has actually declined, for the same period, declined from 35 billion to 23 billion. That's a substantial decrease. What does it mean? It means that, this view about cautious, safe, cash is safe, is actually prevalent across the families. So when you think about that, one will have to think about, is this going to help me to actually do good financial planning and prepare for my goals, financial goals, and also financial, eventually retirement goals. So this will be a very important, when you put in context in this, it means that, we need to do more with the cash that we have, channeling it there. And as an asset manager in the technological tech context that I will use, we are enabler. I think asset managers are enabler. We actually channel a lot of these asset savings that you have. We channel it into economy through the investment. So we play a big role here to be able to bring this investment into sustainable return for the investors. So this is a very important thing to bring back. Of course, the COVID environment that we have seen has actually also created a lot of uncertainties for people who have actually thought about, like what Gerard said, the security of your employment, the environment, and this will actually create a lot of uncertainty for you. So as a result, people are thinking about it. So how should, I should be protecting my assets, to be safe assets. But actually, there is a difference in time in the market versus timing the market in that sense, So you want to be in the market, but you want to actually protect yourself by having a diversified portfolio that you will actually meet the needs of your risk profile. So coming back to answer your second question on where we are going, we are actually having two tracks. Digitization is definitely a place that we are actually moving towards. We are seeing the disruption in the market, and all asset managers will have to move. So we are also focusing on that side of it. Secondly, what we are actually looking at is we continue to build our building blocks that we have had across all the asset classes, and that particularly on the absolute return equities, apart from all the fixed income product that we have. This will actually help us to create solution that now with the platform like yourself that is actually technologically enabled, it means that it opens up the whole market for us, a new segment of reaching these investors. And with a lot of these building blocks, we will be able to create solutions that are more targeted, and this will be actually more important to actually reach out to a lot of the investors today that are actually underserved. So that's
Thank you, Jenny.
how Fullerton will look at in the future.
Okay, you've waited a long time, Boon Kiat.
It's fine.
Last but not least.
And having waited, the cash is still trash. So I'll say that. But the unfortunate thing,
right?
yeah. But unfortunately, I'm not as rich as Gerard because I don't practice what I preach. I just don't have the time. Or I think in our industry, it's just very difficult to get invested. But what I do invest is again. In mainly equities. My view is obviously that I have an income portfolio, but it's largely in REITs and income generating stocks. And at a personal level, I believe in investing in trends rather than the traditional way of looking at markets and everything. So that's sort of in line with what I mentioned just now, my personal interest.
Yep.
So I look at trends and I invest accordingly. And I'll just leave it at that. In terms of where UOB Asset Management is heading, I think I started off saying our vision is to be a leader in digital and sustainability. And we began our transformation some years back. And I believe in digital with a passion. It is not just about what Gerard said on the back end, the middle end. We have done that. We are going to RPAs and everything to make sure that things are efficient and we can compete effectively against the big boys. And I think technology allows us to do that. At the front end, as a business, working with partners like yourself, having our own direct platform, and also at the investment side where we actually have investment technology teams just to help us to enhance our investment process. So that's an entire transformation journey. And sustainability is something I think is the right time to be a little bit more prominent as an investment company. That I think if I were to oversimplify it, it becomes a business risk not to be involved in that. So I think it is, and I think it serves many purposes. I could spend an hour with you on this, Sam, but I'll just leave it at that. Yeah.
And sustainability, I think, is close to all of our hearts, right?
Yeah.
So.
Yeah.
It's a very important trend today that one cannot actually do away without that, because it's actually it's got to do with our stewardship as fund managers, and also how we look at investment. And as I said, we have capital that being entrusted to us, And I think this is very important, how asset managers should actually invest. And we are, like what Boon Kiat say, we are also on this journey as well.
You know, I'll just add on to this. I can't remember in what year, it was 2018 or something. Larry Fink, obviously from BlackRock, the biggest fund manager in the world, he made a comment. It goes beyond your own personal beliefs and philosophy. And I sort of paraphrase it. He said that it is not what I believe in, it is not what you believe in or what you want, it is what our investors want. So you just, I suppose, take your orders, right? And what we are seeing is amongst asset owners, the sovereign wealth funds, and even the corporates that I deal with, it is almost a hygiene. It's a given. You just do it. No? Otherwise, they'll still clear of you. I manage monies for the bank. It's the same. So I think the weight of capital will just make it happen. And I suppose if you allow me, deep down in my heart, someone asked me this morning actually, what's our investment philosophy? And it's always been about investing in quality companies. And in my view, and my conviction, using ESG as an overlay or integrating it into your investment process is really an expression of quality. You will avoid the funny stocks. Unfortunately, you'll probably miss GameStop then. But I'll just leave it at that.
Gerard, anything to add on?
No, on ESG, is both demand and supply. I think from an asset manager, I think all of us, I think, are doing it with conviction. You know, we have integrated by now ESG considerations into our investment process. I think what hasn't happened in Asia, ex-Japan, is that the demand for ESG products from the masses is still not there. It's not there not because they can't see the merits, but we are still in transition. So supply factors have moved ahead of demand factors, because supply factors we have been nudged by the regulators, by our shareholders, and also, you know, it's politically correct to talk about that. We are making progress on that. On the demand side, I think in the next few years it has got to happen, you know, and I'm really trying to find when that's going to happen. So it may be necessary for us to seed some products to just get the track record going. And at Lion Global, that's what we intend to do.
Actually, I'll just add a little bit of color to what Gerard's saying in terms of demand side. I will maybe take a little slant because it's not the less sexy part of it. The corporate institutions are actually demanding it, and that's where, whether you like it, that's where the big money, and eventually I guess the individual market, the retail market will follow. I think so, and they'll follow not just because they believe in it, but because there'll be performance, I think, in general.
Sounds good.
Yeah,
Thank you, guys.
I think if I may add, is actually on the ESG side, there will be a new whole area of opportunities to invest, and that actually could be another space where we can actually have alpha sources.
That's right, wonderful. And we have the next panel on ESG coming up very soon. We've been told that we are out of time, but we want to show the final poll results from Slido. So we'll have that coming up on the screen. Things will never be the same again, guys.
Very different from yours.
By a very dominant margin. And I think, Boon Kiat, you were saying the UOB event, you had 12 months, which was the highest.
But your question is a little bit return to normal.
Return to normal, I think maybe, So that's wonderful.
How you frame it.
It's how you frame it.
It's all about how you frame it.
It's fine.
Thank you so much, Jenny, Gerard, Boon Kiat.
Thanks for having us.
Real pleasure having you and wonderful conversations. We can go on for hours, I think, and all of you could have been on the next panel on ESG as well. But really excited about that. So thank you again.
Thanks.
And everybody, thank you for joining us for the first panel. Please stay on for the second panel on ESG, where we have 3 wonderful speakers joining us to discuss about sustainable investing. Thank you. Good evening.
Thank
you, Sam.
Thank you, guys. Thank you.
Thank you.